Welcome back to Affiliated, everybody. We're still here in Costa Rica at ClickBank Platinum Summit and wrapping up the podcast series here with Caleb Guilliams. He is with BetterWealth. I shouldn't say with. You founded the thing. You're the owner of the thing, the president, CEO, all those fun titles, right?
All the problems come
all the
to
problems,
me. So
yeah.
yes, I get all the credit and all the bad reviews come to me as well. So,
that's right. And your better half is over here with
Yes.
us too, watching it. Yeah. But it's no, I'm stoked to have you here. Caleb rocked the stage yesterday for our platinum attendees. And I was like, dude, can you hop on the podcast? Because we need to do more business together and help people find you in our space. Would you, I don't want to pitch it for you or not pitch it, just explain it.
Yeah.
Would you just kind of give an overview of what you do with BetterWealth?
Yeah, it's a lot of fun because I speak all across the country and world about money. And some rooms you get like people that are like, they like cross their arms and they're like, oh, this is kind of boring. With rooms of entrepreneurs, you know, sometimes it's hit or miss. Yesterday was so special because everyone was leaning in because what I essentially teach is wealth efficiency. It doesn't sound sexy. We're not teaching you how to make more money. I'm not teaching you a copy strategy that's going to like put $1 million back in your pocket. What I am saying is every dollar that you can save is worth way more than just that dollar. And if we can be efficient, I think about it like a bucket. So many people here have money, i.e. water, flowing into their bucket, and they have a bunch of holes. Yep. So their solution is let's get more water to flow into our bucket, which is amazing. But the problem is the holes are just going to get bigger, and it's like water is sifting through. And so my whole philosophy and how I help people is, what if we could seal those holes? And you will win by default. And so some of the biggest areas where people are just getting crushed as it relates to their wealth are taxes. Like majority of people, 9 out of 10 business owners are overpaying on taxes. That's a massive issue. Debt, you know, how we're saving. A lot of us are not investing properly. A lot of us are unclear about what we actually want. And as a result, we're living to a fraction of what we can. The last thing I'll say, and this is kind of what I do in opening, is I say, on average, we can save people about $30,000 just by them meeting with us because of taxes and other things. And someone will be like, 30,000, like that's great, but I could do a marketing campaign and make 50.
Sure.
And I like to remind them, whenever we save $1, that's way more valuable than making $1. So at a 10% savings rate, a $30,000 savings, one-time savings, is an equivalent of you going out and making an additional $300,000.
So I see what you're saying there, but explain that a little more.
And by the way, the average savings, I saw this just today, the average savings in America right now is less than 5%.
Yeah.
Okay, so this is what I mean, is if we can look at someone and say, and I can just find money that you're currently losing, okay? So let's say I save you $30,000.
Right.
And you're like, okay, well, I could just go make that money. But if you're only saving it at a 10% rate, it's like, why is that? Well, it's because of taxes, it's because of consumption, it's because of potential bad habits. And so just when you make $1, like 50 cents of that is gone just because of taxes. And then other things like just spending in general. And so what we've just found is if we can save money, and then our one agreement with people is if we find money that you're overpaying on taxes, we're going to save that and invest it. We're not going to spend it. And so that's kind of our agreement, because it's like you're already surviving now.
Sure.
We're not going to spend the difference. We're going to invest the difference.
Well, gosh, there's a lot of ways we could go here. And I think we're going to do more of these because you've got a lot of value to add. I'm really curious, when you're looking at, we have a lot of solopreneurs that use ClickBank, right? Someone who's either an affiliate who's making money, replacing their income. They could be a super affiliate doing 8 figures in ad spend and taking home a very good paycheck with that, right? Could be a vendor or a seller with a product and a team, anywhere from $0 to 9 figures they're earning. With that kind of range or that kind of clientele of that entrepreneur, that solopreneur, where are their blind spots? When you talk about the 9 out of 10 overpaying on taxes, like what are some of the common things you see them striking out on and just not understanding? Yeah,
there's a couple areas. Number one is a lot of them don't have their entities dialed in. And entities could be like, they're like, oh, I have an LLC. Well, that's not a tax filing strategy. That's like, it's called limited liability corporation. So
I'll just write this off. I'll just write that off. Right?
So it's like, should you have an S Corp? Should you have a C Corp? How should your entities be structured? And straight up, if a lot of people just get into this like laptop lifestyle kind of deal, a lot of them aren't structured in a way, and just by structuring you can save 15% of the money that you're paying yourself. So just that one, like,
that's huge.
Just structuring your entities like could save you $30,000 if you're halfway successful as an affiliate marketer. So that's number one. Number two is deductions. Deductions are a direct, like, it lowers your actual income. And so, you know, a lot of people don't know that right now in 2022, if you write off meals, you can write them off 100%.
100%, right? Yeah.
And so that a lot of people don't know that. There's so many deduction opportunities out there, and I think the key thing is it just has to be ordinary and reasonable, and you have to have good bookkeeping. A lot of times people get themselves in trouble because they deduct things, but they don't have good bookkeeping to back it up. If you have good bookkeeping and you can justify, like, this is like actually ordinary and necessary for my business, you're going to be good.
Yeah.
Then the next thing is what we call depreciation, and depreciation is just like a way to get a write-off because you can invest in assets like your real estate, cars and whatnot. And sometimes depreciation, you can actually get a deduction from that. Tax credits, there's like over 35 tax credits available for people that are individuals and business owners. And this is money that the government will actually put in your pocket.
Yeah. Will you quickly break down for the people maybe don't know, but the difference between a credit and a...
So just to simplify this, if you have $100,000 income, just to make it simple, and we deduct $20,000 worth of expenses, you're going to be paying taxes on $80,000
of income.
Yes.
Right. Yeah. Okay.
So you're still it's still like you don't have to pay it on 100, but you don't save 20,000. Okay.
Right, yeah.
It's like you don't have to pay tax on the full 100.
25% of the 20 grand.
Well,
gotcha,
if your tax rate was 30%, you would essentially save $6,000 in a $20,000 deduction, if that makes sense.
Yep.
A credit is actually dollar for dollar hits your account. And so if I owed, a credit just offsets what I would have to pay. In some cases, the government will have money that shows up, kind of deal. But so credits on average credits across the board are better. I would take $1 credit over $1 deduction. And the reality is you can have both. It's not one of these things where the government's like, if you choose credits, you can't deduct. Like, the cool thing about tax strategies is you can have all these things working for you. You can have depreciation, you can have credits, you can have deductions, you can have advanced strategies like foundations, and you can do the Augusta rule and all these other cool things. And all together, we can take someone who's in the, paying 30, 35% and get it down to 20, 15, and sometimes even lower than that, just if we're being smart. And it's all about looking forward and planning versus just prepping and saying, well, this is my numbers and this is what I have to pay. So, like, my number one advice is push back, ask questions, challenge the status quo, and don't necessarily just accept what your accountant or CPA says that you have to pay. Really start asking, and then going forward, be proactive.
That makes it tough, because that's how I operated for quite a few years. It's like, well, this is what TurboTax says I have to do. So here, and I'm still mostly there, but I was like, okay, no, I actually installed solar panels last year. There's a big credit on that. So it's like I was in a much better spot just from things like that. But I'm W-2, so a lot of what we talk about is less applicable to me than the solopreneurs out there or the teams. Is there any common tax credit?
But here's what's cool is you're W-2, but you can also have a business on the side.
Yes.
So you literally, the IRS says you have to try to make money. So you literally could have a business that's not making money as long as you can prove. I promise, I suck as an entrepreneur, but I'm trying to make money. You can take deductions. And by the way, I think if you lose money consistently for over 3 years and it's not clear, you're just using it as a loophole, you could get in trouble. But at the end of the day, if you're trying to make money, you could set up an LLC just as a tax strategy on the side. And so that's, again, none of this is investment advice, tax advice. Don't sue me, please. But it's just trying to think outside the box.
Yeah, there's so many ways to structure it. Are there any common credits, looking at those, that you see the solopreneurs are able to take? Because I imagine the credit piece is pretty particular on what type of business or what type of structures you have.
So research and development credit is probably one that I would highly look into if you're looking at software, if you're doing something that you're like, man, this would have an impact on people's lives. You got to realize the government, when people make the tax code to be super complicated, at the end of the day, a few pages of the tax code tells you what you owe. Everything else is ways around that. But think about it. The government, if we as entrepreneurs can go and serve people, so it's if I donate money to a charity, the government's saying well, you're doing now you're bettering society, and so we're gonna incentivize that.
Right.
There's a lot of tax credits for real estate. Why do you think that is? Because I believe entrepreneurs and investors can build real estate better than the government. It'll be more efficient. So the government says, instead of us having to go build buildings, I'll give you a credit or deductions or depreciation to incentivize you to build properties so that people can do housing. So we have to think about this whether you like the government or not.
Right.
What you want to do through tax strategies is just partner with the government and play their game. They'll tell you what they want to incentivize, and if you can get a benefit while giving the government what they want, a lot of times that will come from either credit depreciation or deduction. And so it's just understanding that, and like the government, it doesn't always make sense, but just like the credit score, right. I don't really understand why they do this, but you have to play the game.
Yeah. Looking at how would you call it? Like when someone is looking at, like, okay, I set up my LLC, I have an entity, I'm doing enough, right? We know they aren't. What risks are they running if they don't have clean books? If they are just kind of running that way, they're just deducting a lot because they think they can, just writing things off. I don't want to focus too much on the doom and gloom, but like, what are some of the risks?
I think number one is, how do you even know what to do? Like, if you don't know your numbers, how do you know if you can actually hire somebody? How do you know if you should join a mastermind? How do you know if this marketing campaign is right? How do you know if you're doing well in business? A lot of people, and this will convict a ton of people. We might want to make this like a cut in the beginning. A lot of people determine their success based on what's in their bank account. Yes. And that's like a lag measure. Yes. That's like, oh, I have money, I feel good. I don't have money, I don't feel good. And that is a really, really poor way to run your business. But if that's how you run your business, you most likely need a better bookkeeping system. And a lot of times it's on you. Like, a lot of times you're the issue, and you need to invest in helping people know the numbers, because it's like you're flying a plane blind, and as a result, that's not going to end well.
Yeah, no, I've been shocked at the levels of scale of businesses that operate that way.
Right.
And it's like, and all of a sudden something blows up and they realize they either owe a lot or this bill goes out, and all of a sudden the cash in the account is gone. They're like, where did that go?
Right.
And they're asking us for help on the reporting on where the money was going out of. It's just like, what were you doing?
Yeah. And by the way, we're all there. I was there. One reason we're doing bookkeeping and taxes is I have the pain of being like, man, I help people with their money, and I don't even know what's going on. So it's like, you're not alone. Like this is across the board. When we say 9 out of 10 business owners overpay, that's 90%. That's a pretty insane number if you think about it.
Yeah. So I'd love to go a little deeper into that bookkeeping part, because I think that misassumption probably in the space is that, oh, like the accounting, I've got a guy, like you mentioned, or like I'm just doing it, it's fine. Like I use QuickBooks or something. Like, but like, what are people doing that you help with? Like, what are they doing to actually make bookkeeping a profit driver in their business? Actually help them understand their customer lifetime. Like, how are they actually doing that at a level that's different than what 9 out of 10 are? Yeah,
it's interesting. I'll say two things. Number one is we talked about earlier. If you can save $1 at a 10% savings rate, that's an equivalent of you making 10 extra dollars. Majority of people are not even at a 10% savings rate. And so my question number one is, what is the real value of saving real money? Because we can do advanced tax strategies, but if you have advanced tax strategies with no bookkeeping, you're literally, that's not a good strategy. Don't do that, because you can, like, for example, like the Augusta rule is a creative way to write your personal residence off 14 times or less tax free, and it's a way for you to essentially rent your house to your business. Your business takes money in from a taxable account, puts it in your other pocket tax free. All legit, but if you don't have good bookkeeping, someone could say, like, why did you choose this price? And like, did you do this properly? And so it could be problematic, and yet that could be $10,000 of actual savings if you do it properly. Gotcha. So it's like, those are like things that just, like, you need good bookkeeping, because it's kind of your insurance to make sure that you can have the strategies that you have. The other thing is, a lot of people come to us and say, like, I feel like I have to tell my accountant or bookkeeper or tax strategist, like, hey, have you heard about this strategy, or have you heard about that strategy? And the sad reality is, a lot of people just don't, like, their model is not built on helping you save taxes. Their model, and they get paid by filing, so they're incentivized to file your taxes, whereas you want to just find someone who's, like, incentivized to save you money. Because if you could partner with them on that, it can be a really beneficial thing.
Win-win there.
Yeah.
Can you just, so like you're talking about, like, good bookkeeping. What does good bookkeeping look like in a business on a maybe day-to-day or week-to-week level?
So let's talk about month to month.
Okay. Yeah.
On month to month, you should know your numbers. You should have P&Ls. You should have,
So what's
statements
coming
of
in,
cash
what's
flow.
going out.
Yeah. And,
where's it coming in from, I assume.
right. And you should just have some basic, trends of like, okay, like where's money, how is money flowing? And like, are you getting monthly reports, and do you know what's going on? And can you answer, can I afford X, Y, or Z? That's what you should have that. Also, from a tax strategy standpoint, it would be wise for you to talk to someone at least 4 times a year solely on tax strategies, because a lot of times people, like, December comes around, they're like, okay, what do I need to buy? Like, I need to buy new cameras and all this stuff, where it's like, it shouldn't be a December conversation. It should literally be a whole year conversation. And it's just difference between it's the basic of like, here's the big number, I need to lower it, versus like, how can we actually be strategic with our business and pay as little tax as possible? If you want to do that well, you can't just wait once a year to talk to your accountant.
Yeah, and that makes a ton of sense. Is it so on a month-to-month, or like, so are your clients, when they're running this business, they've got cash flow coming in from multiple places? It can be affiliates, Facebook campaigns, recurring revenue. Like, are they breaking it down, actually looking at, okay, here's how the cash is coming in on all these marketing campaigns and channels, here's where it's going out? Right. Like, how granular do you get?
It all depends on where you're at. I want to know everything. Kind of same point of like, okay, so I hate to, like, don't take this the wrong way, but if you are hiring somebody, if you have somebody on your team, what is the rate of return that they're getting you? Right. It's like everything that we do, from a microphone to a person. And so I think someone said this is like, if you're not tracking, you can't market it. Yeah. So it's like, if you're not tracking your numbers, how in the world can you market something? And I just agree with that, is like, and it might sound super boring, but it's like, man, if you don't know your numbers, how in the world can you know what to do? And so my recommendation is just account for everything and know your numbers. And that comes from where your money's coming in, because you might have your biggest launch might be bringing in the most money, but what's the actual profit? And I think that if I just summarize this whole thing, is cut down to the real profit, because revenue can be very misleading. A lot of people here will talk in gross, like, oh, this was $1 million campaign. Well, I would take a $50,000 campaign based on profit, because you could have $1 million revenue, but it could cost you 1.1 million. Right. So you're just negative 100,000, and it's not fun to say, well, I just lost $100,000 on this. So I would much rather get my award and say did $1 million through this deal. We should be measuring everything off profit, and that's ultimately your revenue minus expenses. What's the actual leftover? Yeah. And after paying you, if you're in your business, you should be paying yourself a salary, because you're lying to yourself if you're not. Yeah. No, I totally agree with that. And I was lamenting with a friend and mentor of mine. We're just like, it's so much about the gross sales numbers that get thrown around the space, right? Yeah. And it's like, it's this big sexy marketing numbers and things like that, but no one looks at the profit margin of things. Yeah. And you could run negative on an acquisition if you've got a good if you know your numbers. Path. Yeah. If you know your lifetime value of a customer, it's like, I lost money acquiring someone, but they're worth more long term. I'm with you, man. Yeah. And no, I've seen it with clients, right? And they think they're profitable, but what they don't realize is that this one specific channel is profitable. The rest are all hurting them. Right. If they could actually just if they could just focus more on this one and scale, they get a lot further ahead than trying to go across. Did Rudy talk about Disneyland? Yeah. Okay. Yep. It's a perfect example. And he gets all the credit for this, but it's like, they spent millions and millions of dollars on fireworks. And you'd be like, why did they do that? Well, they do that because people were leaving the park at 4 or 5 p.m. and now they're staying for fireworks, which is brilliant. So now they're buying like way overpriced soda, overpriced dinner and all this stuff. And so they are like, okay, a couple $1 million fireworks. We're not just, flushing that down the toilet. That's making us a lot of money. Well, they couldn't just make that off of a gut feeling. They can probably track that. Yeah, they can see I'm sure they have it down to the science, right? Where if someone stays in the park for X minutes, that's worth X dollars. That's right. Yeah. Yep. I'd love to look at the little bit like we've talked a lot about the business part. Can we chat a little bit about the personal part, the personal finance piece? Because I see that part get interesting, especially when someone's new to money, right? When they're coming in, all of a sudden success is happening. But even on the other side, where it's just like they're just running their businesses, like, how do you see good people, or how do you help people manage the business finances and then how they're paying themselves and the personal finances? So I think if we take a step back, we have to understand frameworks. And so if someone asks me, Caleb, what is your framework to wealth? It's really a couple things. Number one, know what you want. We talk about ROR standing for return on result. Like, get really, really clear on what you actually want. And that should be the metric. So you've heard me say this yesterday, but intentional living is your financial freedom metric. It's not what a rate of return. It's not a 4% rule. It's like, what do you actually want your life to look like? And that is the goal. So everything that we're going to do is going to be reverse engineered based around that. The second thing is when someone asks me, what is the most important financial metric? It's cash flow. Because cash flow is the most important thing. It's like, if I could be a billionaire on paper, but if I don't have the ability to translate that $1 billion or whatever assets to cash flow, I wouldn't be able to stay here at this resort or buy water.
Right.
Because, cash flow, some people call it king, some people call it queen, whatever. But cash flow is really important. So we need to measure our decisions based on cash flow. The third area is when you have money, it only does two things. Your money's either saved or it's consumed. And when you lose $1, you don't just lose that dollar, but you lose what that dollar could have earned you the rest of your life.
Right. It's not compounding for you anymore, right?
Right.
Yeah.
If you save it, it can be saved for a future consumption. So a lot of people will push back and say, well, wait a second, that's way too simplistic. Money does more than just being consumed or saved. And I push back and say, okay, prove it. And no one to date has showed me a third way that money goes. So consumption, there's indirect and there's direct lifestyle. Indirect could be like your taxes and things that you're like, it doesn't directly affect your lifestyle, but if you don't pay your taxes, you're going to jail. So it's like right. it is included with your consumption. But then some of it goes to like, I enjoy lattes, or I want my kids to go to private school, and so those are obviously going towards your lifestyle. So what we essentially can do is if you're making $100,000 a year, and you're saving $10,000, what does that tell me about your current lifestyle? It costs you $90,000.
Right. Yeah.
But you're like, well, I only spend X amount a month. No. You save $10,000. Where's all the other money going? It's gone. I don't care where it's going.
Right.
It's no longer working for you. So what's really, really cool, and I think we're one of the only companies that do this, is we simplify this equation down to two lines. Line number one is your current lifestyle. Line number two is what your assets will do based on your projections.
Gotcha. Yeah.
And that's accountability. Line number one is what you want. Line number two is what you have. And then what we can do is we can say what needs to change. And a lot of people, 98% of people that come to us, there's some imbalance. That means there will be some date that something needs to change. I would rather know about that now than wait 30 years. Yeah. And so that's that's essentially how we roll. And it's very basic. What do you want? Cash flow is the most important metric. Everything can be measured. Your money only does two things. Let's model that. And from there, a ton of accountability comes. And then we can look at different strategies. But that's the framework. And then from there, we can get into like the how much you should pay yourself, the entities, and all that stuff. What I find is if we don't get the high level, a lot of it's just will go way over people's heads.
Gotcha. That makes sense. Can you chat about what is a good, I think the hard part that I find in this space is that we work with a lot of very good offensive players, right? People that are good at sales, good at marketing, they're good at generating cash, whatever that might be. They're not great at playing defense, right? Kind of these pieces that we're talking about, the back end operational pieces, the insurance pieces, like the bookkeeping. But like at what point, I know the answer is probably now or 10 years ago or immediately, but at like what level of business or income should it be a trigger for someone going, I really need to talk to Caleb at BetterWealth?
If you're making over $100,000 a year,
I'm taking in his income. Yeah,
you need help.
Yeah,
like that's where you can start saying, okay, I'm paying taxes. If you're making $100,000, you have potential, meaning like why not 200 or 300? Right. Here's my advice, not investment advice. Okay, if you're making $40,000, $50,000, $60,000, focus on making more money.
Okay. Yep.
All your money should go into how can I maximize what I'm doing to make more money. Like there's things that you can do, but at the end of the day, I'm not gonna like try to like tell you to do a bunch of things. Like figure out how to make more money. When you're over that 100,000, then it's like that's where like the line surpasses, and then you could potentially create more value by keeping versus just doubling down. But it's like, and this will be super extreme, but if someone makes $10,000 a year and they're like, hey, Caleb, like, where can I save my $10 a month? I'm like, okay, we could open up a Roth. We could put it into life insurance. This is kind of a joke. Or you could double your income and we could save 10,000.
Yeah.
And that sounds extreme, but like a lot of people need that. The cool thing about everyone here at this event is everyone's over that.
Yeah.
And so it really comes down to, okay, continue to make more money. That's an amazing mindset. But now we need to shift our mind and say, okay, we can do some amazing stuff if we can keep it. And if you want, we can talk about life insurance. I don't know how much time we have.
I think we'll say that for another one.
Okay.
But I'd love for people to go be able to check out your resources you might have on that,
Right.
or contact you if you have questions about how life insurance can be.
We have a
advantage,
ton of resources. Just like high level overview. What I'm probably most known for, and what our specialties most at BetterWealth, is overfunding life insurance. And we teach entrepreneurs how they can save money in a life insurance, and their money will grow for them. They can use it as an alternative place to control capital, and they can do a lot of things. And so it's great for entrepreneurs because we ask about defensive strategies. It's a way for you to save and have that money growing for you the rest of your life, but you still have access to it.
Yeah.
And that usually, especially if you're an entrepreneur, is an amazing fit because it gives your dollars more than one job, but it creates accountability for long-term savings.
Yeah. No, because I've heard like kind of you see the ads on Facebook or TikTok or whatever, the gurus talking about it, and it sounds almost too good to be true.
Yeah.
But the way you break it down, I'm like, okay, this makes sense. Like, I think you put it right. It's not an investment strategy.
It's not.
Yeah.
It's not. And banks, there's over 3,200 banks today that have some of their tier one assets, their most safest assets of their bank, in life insurance.
Oh, interesting.
A ton of Fortune 500 companies, a ton of people like myself. I save over 6 figures a year. Over 6 figures a year goes into life insurance.
So you're putting 6 figures a year into your.
But I'm not like, why wouldn't I? If I can do that, why wouldn't I? Because I'm able to use that capital, but my money's growing tax free the rest of my life, and we have millions and millions of dollars in death benefit in case something happens to me and I die. There's millions of dollars that are going to go to the things that I care about and that I'm working towards.
Gotcha. Yeah. So you can kind of like, not assure, but you can really.
It's taking $1, maintaining control, getting lifetime compounding, lifetime options, and at the end of the day, protecting the most valuable asset, which is ourselves, which is you, if you're watching or listening. Yeah.
And I like how you broke that down on the 100K level too, for when you should be looking at this, because that's what I found. I found the FIRE movement pretty early on in my 20s and kind of budgeting and all that, and was like, I was making minimum wage and bank account wasn't going up. I was like, well, I can't really save anything because I just have expenses to cover. So how do I advance my career and make more money?
And this